Alright, good morning. Let's go over today's trade plan. So in the overnight session we saw that ES continued heading lower and found some buyers near that open gap at 33 below yesterday's low. So that weakness continued in the overnight session, and then we got a pretty decent bounce off of one tick ahead of 33. But the overall bias continues to be bearish, and bigger picture, we can maintain that bearish bias below 64.5. But ideally, the market should not really retrace much above the 54.75 to 56.75 if we're going to continue to see that firm control on the sell side. So, as you've seen, even in bearish markets, when the context is quite bearish, the corrections can be pretty sharp, the bounces can be sharp, but those bounces are usually short-lived, and they present opportunities to short the market. So on the day time frame, we could still technically try to break out above the overnight high, but any approaches to the resistance zones above can still attract sellers, and on the larger time frame, set us up for a pretty nice short trade. So right now we have to understand that the corrections and the bounces can be sharp. So we're not just locked into the view of the market has to go down from here, right? It can balance and then head lower, but the overall bias is going to remain bearish, especially below 54.75 to 56.75, and technically even up towards 62 to 64. Sellers can still enter and push it lower by a decent amount. Right now, the high odds target below is the 28.75 to 29.75 support. The market is pretty much set to test that support zone today, and even below it, we could continue and test the bottom of a larger balance area at 22.5 to 25.5, and then perhaps get some responsive buyers active at that zone for a bounce back up towards the 30 to 33 area. So right now, the focus is still going to be more on the short side with sellers in control. And we can get sellers even right off the open at pre-market resistance, right? Those would be still decent spots to attempt to short, but we just have to read the market a bit more because, again, the market can try to break higher, fail, and then turn around. So, I can either go right from here, ahead of pre-market resistance, or it can balance, try to stage a breakout, fail, and then head back into, the overnight range and head lower. So, at this point, we do want to be more cautious on long setups, with the understanding that, again, those corrections, those bounces can happen even in bearish markets, but overall, if you want to just play the safe side, then overall on the larger time frames, the sell side is the better side to play. The short setups can offer better reward to risk. So and they're just, at this point, they're just simpler setups, right? On the long side, you've seen even from yesterday's session, in order to take advantage of it, you do have to be reading the market very actively, and you have to be managing your trade quite actively, where you're willing to let the trade go 4 points, 3 points in favor, and then it might come right back down, and you have to scratch the trade, take a break even. Whereas on the short side, since the reward to risk is much better, you can simply enter the trade, put your stop, and let the trade work out. Because if it does work out, then it can be a 4 or 5 hour trade. Whereas on the long side, you really have to time it almost perfectly to get it right. You have to actively manage it, so it is a bit more complicated when you are taking counter trend trades, right? Which at this point, longs are definitely counter trend in the short term. So, if you want to keep things simple, then you can just wait for some nice short setups to present themselves, whether it's at pre-market resistance, whether it's intraday after you failed at the prior VPOC, and you have some directional conviction now on the day time frame to the downside. So if you want to keep things simple, just wait for sharp bounces and short them. That's a strategy that's high odds and high reward to risk. Be cautious on long setups, right? either take them at ideal trade location when the market is short-term exhausted and kind of overextended into a zone, and then actively manage them, or you can simply avoid the longs right now until the market changes on the bigger picture and on the larger time frames. So on the downside, again, that open gap seems like it'll definitely get filled. 28.75 to 29.75 is a high odds target, and even 22.5 to 25.5 would not be out of the picture. And then at that point, we'll reassess. We'll see kind of where the other markets are at. We'll see how the the day's context is shaping up. Is it still continuing on that heavy momentum and heavy downside internals, or are we now seeing some stability in the markets? Because at the bottom of balances where you can get sharp corrections and where you can get sharp bounces. So we are open to the idea of a decent bounce off the initial support zone, 22.5 to 25.5. But then if that zone breaks, it would mark a breakdown from a larger balance. But because there aren't any economic reports out today, and volume is running at decent levels, but not the 170% type stuff that we saw over the last 2 days. So at that point, heading into the next zone below 22.5, the market would be quite stretched and overextended. So that can again result in a bounce right on the day time frame. Bigger picture, we may still be heading lower, but on the day time frame, 12.75 to 14.75 can result in a 8 to 10 point bounce. So we'll keep that in mind if we actually get all the way down there. So right now, heading into the day, sell side is still our preferred side, and would like to continue fighting short setups. But if we hold above 32 to 34, then you'll just have to be a bit more cautious on location and a bit more conservative. And then if we break pre-market support and then start trading back into the range above 32 to 34, then that would also tell us that we're getting some buying activity here. So that pre-market support, if we break it and start coming back up, can almost act as a micro bull bear zone. So keep an eye on that zone and see, are we holding above it? Once we break, do we hold below it? Those are the types of questions that we'll be asking in real time. So those are really the main ideas on the day time frame. Let's see if the sellers can continue to maintain control. That's really the main bias on the day. And then again, even if we get an upside break and go up to initial resistance, 49.5, 51.5, that would still be a good short. 54.75, 56.75 would be a very good short. So we will look to short any bounces back up into resistance as well. And those trades offer very good reward to risk. So those are the main trade ideas. Let's see if the sellers can maintain control, and we will take it from there.